Hi, Greg Weldon here with WeldonLIVE for Monday, January 14th. And global macro today, of course, it's on China. I still have this Japanese piece in my back pocket, but once again, we put that aside for the more important, the more influential Chinese data, really spooking global markets. And this is something I've been saying since June. You know, it's not just enough to stay static even at record high levels. You need growth. Everything's predicated upon growth, given the huge amount of debt that's out there. And in this case, it really is exemplified by the Chinese dynamic, as we're going to see in a minute, where exports posted one of the highest numbers ever. All right, but relative to the normal seasonal tendency, which is extremely strong for a peak in exports in the fourth quarter, usually November. Okay, this is now a lower peak. And we've seen this now kind of develop where it's growth, then sideways, and now down. All right. So this doesn't fly. I mean, not only do you not have growth, but you have a year-over-year contraction. You have a year-over-year contraction in retail sales, like we looked at last week. And today we get vehicle sales, which show us again the same dynamic in even a more pronounced way, as domestic demand is really starting to slow in China, and it is more than just the trade numbers. It really is, as we'll see in the breakdown of the trade data that came today for the month of December. Stock indexes, we maintain the theme with China. We look at the Shenzhen versus the Shanghai, the breakdown, and then really what's interesting is the economy in China is the one taking the hit economically. But the markets in the U.S. are the one taking the hit in terms of investors, because the S&P 500 performance in the fourth quarter far worse than what we've seen in China. Foreign exchange, we stick with it, the renminbi, and really more about the technical crossroads that is currently facing the price of gold denominated in Chinese renminbi. And this is, to me, really important because part of the macro data we're going to show you today is a real deceleration. It's something that got lost in the mix of the trade numbers. And frankly, I think is more important is the decline in inflation and the pipeline decline that, portends even more declines in inflation in the CPI level in the Chinese PPI. This was big stuff. And as that relates to what we see going on in the renminbi and gold, it all ties together. And it's almost as if China is kind of, again, I use this phrase a lot, and recently it's become applicable in so many cases. But right now, China is kind of clinging to a technical precipice by a single fingernail. And that is particularly true in terms of the disinflation, that basically is threatening to turn into an outright deflation, and then the renminbi and the price of gold.